Amidst all the chaos and bloodshed across the crypto sector, Dash Coin seems to be holding its own. We've actually had a really bullish reversal in recent days, and there's quite a bit of buzz about that. It is one of the few cryptos, along with probably Chainlink and Polygon, that is actually not just weathering the storm, but going up. It's actually been rallying. We had a low that we hit on January 6th, but it wasn't any lower than the low that we hit on December 3rd. That was that big spike down crash we had in early December that kind of started flashing the yellow lights for all of this across the crypto space. So if we look at this 2-hour chart up close, we have a rally bottomed around, let's see, about 115, 116, and we have since pulled up to about 157. And this could be interpreted as a 5-wave impulse. It's nothing particularly corrective looking about it. So we have the foundation for something better here. We zoom out a little bit. Nothing really has changed because we haven't validated anything. If you've been following my other updates, you should be aware by now that Bitcoin and Ethereum had the ultimate sign that we're about to have more bearish action across those cryptos. And that's usually you're looking for a 5-wave impulse down through support. And we did exactly that in Bitcoin and Ethereum. We broke the supports big time on both of those. Bitcoin broke down to, I think, 39,550, something like that. Ethereum bottomed around, I think, 2,900, something like that. But we've had more than enough action, and we've had clear 5-wave impulses down, and what we're calling the wave one of the C wave. So we're not seeing that as much in Dash. So we'll take a look in a second. But right now, we are still in this pattern in which we're calling for a large one wave that topped in August. And the pullback thus far is a very deep second wave. Again, second waves can retrace as much as 100% of the preceding first wave. So this orange pattern is still valid. When we shift to the big picture chart, it'll make a bit more sense. So we had a bunch of patterns. If y'all recall, we had that purple pattern that invalidated on our last update. That was the technical damage that Dash sustained with the big crash on December 3rd. So the purple pattern is completely missing now. I've taken it off since it got invalidated, and the orange is now our primary. The orange is still a bullish pattern. It's just not quite as bullish as the old purple pattern was. And that is because we have retraced very deeply. This whole thing could be interpreted as an ABC and an ABC down. That would be textbook standard for a ending diagonal kind of rally. So the diagonal is the other 5-wave motive structure in Elliott wave theory. And they tend to have a lot of whipsaw. They don't project as high, but could be bullish nonetheless. So far, we haven't invalidated anything. And again, today's green candle, the big sharp reversal, things do look a bit cleaner in Dash. If this pattern holds together, we would expect our third wave to get into the 450 to 570 range. And our ultimate top would probably fall somewhere between 576 and 670, somewhere in that range, just because diagonals project a little bit lower than impulse waves would. However, based on Dash Coin's history, we have had very lame beginnings to rallies followed by spectacular blow-offs. So those green boxes overhead would represent the more bullish interpretation of the pattern we're looking at, because those Fibonacci resistances overhead are so strong and so prominent and have so much confluence, they could magnetically pull the price up to those levels. If that happens, we may not see a huge amount of action right away, but everything has a beginning. So that would be the most bullish expectation. Now, we've been talking about the great things about Dash. What about the bearish red alternate pattern? So to kind of dig into that, I'm going to shift over to our Bitcoin chart real quick, just to give an idea of what is happening over there. So this, I went over the other day. This is similar to what we're seeing in Ethereum, as well as several of their cryptocurrencies. But we had a top that we hit in November of 2021. And ever since then, we have a clear 5-wave pattern down. I'm calling that the wave one of a larger C wave impulse down. So C waves are always in the form of some kind of 5-wave motive pattern, usually impulses, sometimes ending diagonals. If that's the case, expect to see a big sharp bounce, like a pretty deep retrace for our wave two back up. It would be a bull trap, corrective bounce, whatever you want to call it, fake out. And then we'd have a nasty swoon in Bitcoin and Ethereum, if that is the case. So this pattern is probably about, like, it's becoming my primary, especially after today. This has become maybe about a 60% chance that this is the pattern that's going to happen. Doesn't mean that the bullish green pattern is dead, but with these clear signs of an impulse down through support, things are not looking very good. So enough with Bitcoin. This is the reason I am concerned about the crypto space in general. Again, we know that Bitcoin and Ethereum are the key indicators of sentiment. They have the largest market cap across the cryptos. So if they crash, it could be a warning sign for Dash and other altcoins. So until we see something on this chart more indicative of a crash, I'm going to leave the red pattern as an alternate pattern. If we do see a red pattern, here's how I'm interpreting. So I'm looking at this initial dip off of what I was calling the wave one, a smaller wave one for the red pattern. So that would be our wave one, the bounce be the 2. And based on the internal Fibonacci ratios, if this is the third wave here, it's definitely not complete yet. It didn't go low enough for this to be a complete third wave. And the way we're shooting back up, we may invalidate it. It's not totally clear. It's a bit more apparent on the small picture here. So again, our top back here is the top of the B wave, the origin of our wave one. So this would be a wave one impulse. That would be a corrective second wave bounce. And we would, in theory, be in the middle of our third wave. Third wave should really get to $39. This would be the linear chart target. On the log chart, we expect to go a little bit lower than that probably. At any rate, our second wave would be targeting somewhere in the $60 to $70 range in Bitcoin. That would be the ultimate bottom. But again, it's not clear in Dash what exactly is happening. Again, we're having a bullish reversal, so maybe we have our first wave done already. Maybe it's not bearish at all. We got to wait for some more action to make a firm decision. So in summary, things are not looking too bad in Dash at all. We're reversing pretty sharply. However, if we do turn around, if we start breaking back down lower, we'd want to hold the $102 mark, $102.17. That was the support I mentioned last time. If we break that, there's a very good chance that we're going to go a good bit lower. We could break $80. That could be just a third wave alone. It could be one continuous drop right down. It's also possible in Bitcoin and Ethereum. As I mentioned, Bitcoin, I don't expect us to fall right through supports down to our subsequent C wave target if this is the red pattern that we're following. But if supports break, there will be lights flashing. So don't forget to subscribe to get my warnings on not just these coins, but across the crypto space, because cryptos are one asset class. They move together. The sentiment that drives one crypto drives all the cryptos. And if you enjoyed my video, don't forget to like. Until next time, thank you for watching and happy trading.